Hello financial fans, welcome back to another stock analysis. Today we'll be covering Zoom stock ticker ZM. Zoom Video Communications is a cloud-based video conferencing and communication platform that allows people to connect and communicate with each other through audio and video calls, webinars and virtual meetings. The company was founded in 2011 and is headquartered in San Jose, California. Zoom's platform is designed to be user-friendly and accessible to anyone with an internet connection and a device such as a computer, tablet or smartphone. The platform supports multiple participants in a single call, allowing people from different locations to connect and communicate easily. Zoom offers various features such as screen sharing, recording, virtual backgrounds, and chat functionality, making it a versatile tool for remote work, online learning, and social interactions. The platform also offers enterprise-grade security features including encryption and password protection to ensure the privacy of users' data and communications. In addition to its core video conferencing platform, Zoom also offers various other products and services including Zoom Rooms, a hardware and software solution for conference rooms, Zoom Phone, a cloud-based phone system, and Zoom Video Webinars, a platform for hosting virtual events and webinars. They are currently sitting at a $20.7 billion market cap, and in 2022 they generated a revenue of $4.4 billion. 8% of their revenue comes from Asia Pacific region, 81% from the Americas, and remaining 11% from EMEA, which stands for Europe, Middle East and Africa. To determine the final valuation of the company, we'll be using a margin of safety. This margin of safety will be based on the financial ratios, the financial growth, and the health of the company. We'll be using a standard margin of safety of 20% that can never be below 0%. And the margin of safety can either increase or decrease by the ratios that we're going to look at in just a moment. And the severity that the margin of safety will increase or decrease by will be determined by using a scale. When we're using 4 colors in a scale, bright red will mean a 5% increase, orange will mean no change, light green will mean a 5% deduction, and bright green will mean a 10% deduction. When we're using 3 colors, bright red will mean a 5% increase, orange will mean no change, and bright green will mean a 5% deduction. The first two metrics that we'll be looking at are EBIT growth and the margin growth. The EBIT has gone up, going from $12 million in 2019 to $245 million in 2022. The average EBIT growth is 61%, meaning a 10% deduction in the margin of safety. The margin is also going up, going from almost 2% in 2019 to 5.5% in 2022. The average margin growth is 4.3%, meaning a 5% deduction from margin of safety. The final two metrics that we'll be using are the debt to EBITDA ratio and the return on invested capital. To get a debt to EBITDA ratio, we have to take the debt of the company, subtract the cash from it and divide it by the EBITDA. Out of this we get the amount of years of EBITDA it takes for the company to pay off all of their debts. And as you can see top left, Zoom has very little debt and they have quite a bit of cash, meaning that they can pay off all of their debt just using their cash. This indicates a 0% debt to EBITDA ratio because Zoom has no net debt, which is a 5% deduction in the margin of safety. The return on invested capital for Zoom is sitting at a very high 35.9%, meaning that the management is very effective at allocating capital, which is another 5% deduction from margin of safety. Looking very good so far for Zoom. Let's go look at the valuation models next to determine the intrinsic value of the company. The first valuation model we'll be using is the discounted cash flow model. I've imported the free cash flow of Zoom going from 2020 to 2022. The average free cash flow growth during this period was almost 600%, but that's skewed because in 2020 to 2021 there was a massive increase. But I'm projecting an expected growth rate of 5% over the next 10 years and their free cash flow annually. And with this percentage we can determine the future free cash flow for Zoom and determine the terminal year valuation using a perpetual growth rate of 3% and a discount rate of 9%. This gives us a sum of free cash flow of $22 billion, and to get our equity value we have to add our cash and equivalents and subtract our debt, leaving us with an equity value of $27.3 billion. To get a discounted cash flow price per share, we just have to divide it by the amount of shares outstanding, giving us a price per share of $111.42, which is a 57.4% upside from the current price. The second model that we'll be using is the Graham's revised valuation formula. In this model we'll be looking at the earnings per share that Zoom is generating. We'll be going with a growth rate estimate projected by Wall Street and the current yield of AAA corporate bonds. And we go by the theory that a company of no growth always has a PE of 7. And taking all of these metrics in account, we get a fair value of $51.50, which is a 27% downside of this model. Since these two models are the only models that are compatible with evaluating Zoom, we're just going to go straight to our final overview of our valuation. But before that, if you want to get access to all of the models that I use in my video, you can check in the description for my Patreon link. Let's go look at the final overview of our valuation models next. Looking at our final overview, we've imported the discounted cash flow, the grains valuation, and we've gotten an average price per share of $81.46 out of that. A margin of safety was determined earlier using a standard margin of safety of 20%, 5% deduction for the debt to EBITDA, 10% for the EBIT growth, 5% for the margin growth, and 5% for the return on invested capital, giving us a fair value of $81.46, the same as the average out of the models. And with the current price of $70.77, we get an upside of 15.1%, so it's indicating a slight buy at the moment. If there's any other companies that you would like to see me cover on this channel, please let me know in the comments, and thanks for watching.